Morning, Shane. Thanks very much for joining us on Blue Notes, the morning of the half-year result. On the surface, this looks a very strong, perhaps surprisingly strong set of numbers, but how much of that is due to the economic fallout from the pandemic not being as bad as feared, and how much is operational things that ANZ has done?
Well, inevitably, Andrew, it is a little bit of both. But talking about the strong result, I think it's important to put it into perspective. What we're seeing here is really a rebound. Like the economy, that we've seen the rebound, so too has the bank's result rebounded. And a lot of that is absolutely linked to the much better outlook we've seen and the much better performance we've seen in the economy. So that's true. If I think about the overall result though, to put it in perspective, it's still lower than it had been some years ago, so we shouldn't forget that. But of course, in order to take advantage of those opportunities, in order to participate in that rebound, it's really down to the operational performance of the bank. You know, did we get the right settings in terms of capital? Did we have the right responses to customers? Were we able to operate successfully through a very, very difficult period of time? And I think, you know, ANZ, we're very proud of the fact that we've been able to do that. Stand by customers, get things done for them in a really unusual set of circumstances. So it's a really good result for the time, but we think we can do better, and that's what we're really focused on. Better for our customers and actually better for our shareholders. I might, if you will, just walk through a little bit. If I think about revenue is down a little bit. So what does that tell you? It says that we had more customers that we were able to serve, doing more things for them, processing more transactions, but actually overall customers paid us less for that. That's a good thing for customers. That's a good thing for the economy. And in response to that, which wasn't news to us, we've been preparing for this for a period of time, knowing that banking was always going to get harder. Not necessarily we didn't foresee a pandemic, but we knew it was always going to be harder. And so that's why we've been really trimming our sails, if you will, and getting our costs appropriately set. And we had a very good result on costs again, where we got the cost of running the bank down in absolute terms. And of course, the real boost to the result and the reason the headline looks good is, of course, releasing those credit provisions. Last year we were worried, quite rightly, put aside a lot of money for a rainy day. As it turned out, the economy performed better. We didn't need all of those reserves, so we released a little bit of it, and that's what's really given a bit of a boost to the result this half.
And if we sort of dig down a bit into those results then, and setting aside the terrible and ongoing consequences of the pandemic, we've seen, as in many things, a sort of acceleration in what's happened in the last 12 months. There's been multiple business cycles almost. Corporates were gearing up. Then there was deferrals by retail customers on home loans. Then there was that rapid take-up of digital banking. So much was happening. So how did this play out in the individual businesses in the bank? Was it different across the bank?
Absolutely, it was different across the bank. I mean, let's not forget we operate in 32 markets around the world, mostly in Asia Pacific. And of course, at a first instance, all of those countries have been going through different levels of managing through COVID, the actual health consequences. What I'm really pleased about though, is that at ANZ operationally, we really didn't miss a beat. We were able to respond really quickly to what was going on almost in real time. Getting people out of the office back at home, getting them back into the office, giving customers access to liquidity when they needed it, and actually getting it back and taking on liquidity when they didn't. You know, getting customers to move to those digital channels. I mean, we had to literally write code and get new apps out so that people could operate digitally in a matter of weeks. So I think that inherent agility that we've been working on at ANZ, while not perfect, really came through in this year. And that's really what you want to have. You want to have a business that can respond at pace, continue to operate, do the right thing for customers, and quickly sort of adapt to the times.
And yet you've referenced several times ongoing caution. I mean, really, when we see what's happening in India, for example, we can see why there's ongoing caution. But when you look at that mix of businesses again, are there some where you're more cautious than others, some where you're more optimistic than others?
Yes, and you know, first of all, we're a bank. Let's not forget that we are highly leveraged as an organisation, and so we have to be extremely prudent and thoughtful when we run the bank in terms of our risk appetite, whether that's from a balance sheet perspective or whether it's operationally. And remember, this result, Andrew, is really talking about the bank as at the 31st of March. Well, that was literally the day or the day after things like JobKeeper finished. So it's a bit early to tell what the consequences of that are. We're very optimistic. There's lots of reasons to be positive about the outlook, particularly in Australia and New Zealand. But there are also things to be cautious about. We don't know how the vaccine rollout's going to go globally. There are some geopolitical tensions that are still making waves in terms of trade and capital flow and those sorts of things. So right now, we're cautiously optimistic, and we're feeling like we've got our settings in a really good position. Lots of capital, in fact, record levels of capital, lots of liquidity. So that means we've got the ability to support customers who need it, and operationally, really a resilient team of people who've got the right sort of technology and tools to be able to do the right thing and pivot where that help is needed.
And you mentioned lots of capital, very strong capital generation. For investors, last year was obviously a year when they suffered the pain of having dividends cut. I'm sure they're welcoming dividends coming back up again. What sort of flexibility then do you have around that capital, maybe in terms of more returns to shareholders?
Yeah, so one of the hallmarks, I think, of the way we've managed ANZ over the last few years is really that focus on shareholder value and making sure we're really looking after them for the long term. And so we've been taking a very prudent approach to managing our shareholders' capital. We haven't put our hands into their pocket and asked for more. Yes, last year we didn't distribute capital through the normal ways in terms of dividends to the extent we've done in the past, because the prudent thing to do was to be a little bit cautious. And I think that has worked really extraordinarily well and in the interests of those shareholders. So we're conscious of it, and it's great that we're able to return to a more normal dividend policy for now. Now, as you quite rightly point out, we're sitting on a record level of capital. In the techie terms, we're sitting on a CET1 ratio of 12.5% on a pro forma basis. That's about $7 billion more than we would normally require to be unquestionably strong. We're very mindful of that. That money serves us no purpose other than it is a sense of safety and prudence in a time of uncertainty. And at the time where we've got more confidence about the future, of course, we're very mindful that money belongs to our shareholders, and we would explore options to return it, either to invest in the business for growth or to return it into the pockets of our shareholders.
And another comment you made just before is about, even with the rebound that we hope continues after COVID, this is a mature market. Revenue opportunities, are hard come by. There's the focus on absolute costs. So where is the growth opportunity if we can, set aside the uncertainty?
And what you really saw over the last 5 years was a strategy designed to simplify what we do, get better and better at it, and we think that will result in a lower cost base and actually give us that platform for growth. Because when you get into that positive cycle, doing great things for customers at a lower cost, the rest is sort of easy, and that's where we're starting to see that coming through in our numbers in terms of the kinds of customers that are choosing ANZ and the amount of business that they're giving us. ANZ is one of the largest providers, if not the largest provider of banking services, financial services, to other parts of the financial sector. So, for example, things like the new payments platform, which enables real-time payments in this country. Huge investment. Major banks invested along with the RBA to create the ability for me to send you money literally in real time. We built that, and then what we've done is we've gone and said, well, we've got this great capability. We can provide that to a whole bunch of other financial institutions who didn't have that capability. And we are by far the market leader in that. In fact, we dominate that quite significantly. Guess what? Volume through that machine are skyrocketing. They're up, hugely year on year on year, and that's going to be a massive growth engine for us. Clearing, sort of a bit of a techie area of banking, but when other banks and other people send money into Australia or New Zealand, that goes through what we call a clearing payments network. We have, again, more than 50% market share in those things. It's a processing business. We're really good at it. We've been growing our share, and guess what? That's a very, very fast growing business. So there's a lot of growth in areas like that, which are probably not the first thing people think about when they think about banking.
Well, thanks very much for your time. I was just thinking it's actually the first time for about 18 months that we've been able to shoot this video sitting opposite one another. What's it like being back in the office? How do you see the return to office playing out?
Well, it's great, and we're moving back to a sort of a hybrid model, I guess, like a lot of companies where people are working in the office most of the week, but at home when they need to. We went through an amazing change, I think, at ANZ, but we're also now, in terms of getting people out of the office at home, and now we're seeing this sort of move back. And I look at the data every day, and what our people are telling us is that they want to be in the office, they like to collaborate. It's really important for us to be able to do that to deliver great customer outcomes, but it doesn't have to be every day. And so coming back into the office has been great for me. What I've really enjoyed about it personally has just been that informal ability to connect with other people, to be able to solve problems quickly by going to see somebody. Or actually it's the informal running into people in the corridor and saying, hey, I've got something on my mind, we need to solve it. A lot of us have got together and say the speed at which we're able to solve problems and do things is really enhanced when you're with other people, and frankly, so is the creativity. So I think this blend is great. It's great for ANZ. It suits our culture as an organisation, and actually, we think it's going to make us a stronger company for the years ahead. But it was an interesting experiment having to work from home 5 days a week, and but I'm glad to be back.
I'm with you. It's good to meet other people again and to catch up informally. But thanks very much for your time this morning.
Thank you.